All right, so looking at eBay, looking like you had some level of a decent cup here on the weekly. Came up. We never really got much of a handle. Just kind of went to the upside. Looking on the daily, had a nice little gap up off of earnings, pushed a little higher, came back down, and now you're kind of just floating around above that earnings gap, which you kind of back tested right here on the third, getting a little bit of push up and level of consolidation. I like it for a long, assuming we hold the 50 MA. So I think we're going to kind of float around here a little bit longer, let the 50 MA catch up, and as long as we're above that earnings gap, I actually don't hate this idea at all. So if you like eBay, personally, I'd wait for the 50 MA to catch up, and I would put a stop just under that earnings gap. So anytime I put a stop in, I don't want to put it in too close to where my cut point is, because if I put it too close, then sometimes you could get wicked out. So I like to give a few more shekels lower. So the low of this candle is 87.48. Low of this candle is 87.95. So if we're looking at 87.48, maybe you put a stop at 86.95. That way it gives you a few pennies below the whole number. That allows the 50 MA to catch up. I don't hate an entry at 90 cents. And even if, let's do a quick little risk assessment here. If you assumed an entry right around now, it's 92, we'll call it 92.21. You put a stop on, what I say, 86, 86.95. Stop at 86.95. And let's assume you're just looking to get back to all-time highs at 183, to be conservative, right? Profit, 183. So let's see what your risk looks like. All right, so you're looking at a 1.6 to 1 risk to reward ratio. So you're risking about 5% drawdown for 10% upside. And that's only assuming all-time highs. Now, if all-time highs break, could keep going, obviously. I don't hate this. Whenever I'm taking an equity trade specifically, I want to look for at least a 1-to-1 risk to reward scenario. Obviously, you don't want to be upside down on your risk. So if you're patient, maybe wait for a few pennies lower, where this could drop even down here. One more dollar now puts it at 2-to-1. And if you get a little bit lower, what's the wick here? This one is 90.62. So 90.50. It's pretty close. Almost 3-to-1 risk to reward. So if you get a few pennies lower, that risk to reward greatly changes, where now you're only risking 4% for almost a 12% upside. It's pretty solid. So I don't hate eBay here. I think it could be a decent setup. If you're patient, I'd give it a few more days. Let it come down a little bit more. Let the 50 MA catch up, and then you probably get a better entry with a tighter stop loss, because that's especially with what we got coming up with CPI and FOMC. You probably want to have pretty tight stops if you're considering equity trades. So that's what I think about eBay.